Happy Tuesday.
Good day. Good day to you all. Welcome to Tuesday, special night tonight. We're going to get into it and not muck around with long speeches by myself. So tonight, going to be going through looking at some pairs, obviously BTC, a couple of the alt pairs, the reg markets, and then quickly thereafter we'll dive into this supply and demand session. Now, if you were inside the inner circle a little while ago, we have run through this a few times, but still get plenty of questions about it, which is totally fine. We love the questions on supply and demand. It's excellent. If you can master supply and demand, as Ads has done, as a lot of people have done, and sort of show on their charts, it will dramatically improve your chances of identifying liquidity zones, whether it be for a bounce or an area of resistance being supply. You really have an amazing skill set here once you can master supply and demand. So Ads, let's get into it and get straight into BTC. What are we seeing here? No surprises this week, to be honest.
Absolutely not, to be honest with you, bro. Absolutely no surprises. I drew this sort of formation roughly, it was the 20th, it would have been 2 or 3 days ago. Honestly, none of this was here when I did it. Basically, I was seeing a push to the 23, roughly around that point where our trend line was broken, mostly because of the 23. There was a lot of liquidity just to the left of price. Obviously, you can see the white line moving across the screen just to the left, and you can see the amount of liquidity that we had at that point. And the 23 lined up very nicely with that downtrend that we broke here on the 22nd. So a retest of that zone would made sense to me, obviously, and then preceding that, coming down towards our demand or thereabouts is going to be my next play for BTC, and it's playing out quite nicely as we see on the chart now. Honestly, though, in the grand scheme of things, macro scale, we are still bouncing around in this sort of range here. I'm not calling anything too drastic right now. Obviously, we're all aware of the CME gap at 9.6. and I think that's entirely possible. However, we do need to break some critical levels before that. We've obviously got one short-term demand here at 11,250 towards 11,100, and then there is one very, very close to that, obviously at 11,000 to 10.8. So these are the two levels that I'm keeping a pretty keen eye on for the short to mid term. I think for BTC, if we do start to make structure underneath that, then we could be in for a chance to get closer towards that 10k mark. But one step at a time at the moment, to be honest. And 11,260, 11,270, even 11,250 would be where I would be putting BTC, relatively in the next maybe day or towards the end of the week, Ty.
Yeah, I agree with that. This is not really out of the normal. We've been in this range for a fair bit. So we've said this plenty of times. Anything over, well, what it was for myself before this broke out was 10.5 was great, and then anything above 12.5 was going to be promising for a potential long. So happy to sort of fluctuate in this area. And if I do recall, 3 or 4 months ago, we said this, or a couple of months ago, we said that this when it was in this previous accumulation zone, this going between these two levels could occur for quite a long time. There's no reason why. Well, there's no real justification for us to head very, very bullish up to that 13.5, 14K just yet. And there's not really any indication that we're going to break below 10.5 and head back down towards that CME gap, which is very much a possibility, like what you said, Ads. But at the same time, gaps don't always need to be filled. Yeah. But the more weakness that we show at these levels, the more inclined I am to think that we might have these little scam wicks that we've seen plenty of times before. Saw it around the 12th of August, saw around the 7th of August, the 5th, the 3rd, the 1st. It's not out of the ordinary for that to happen. So that's why we say quite a fair bit inside Discord. Make sure you've got those buys set all the way down, even down further than where you think is potentially a good liquidity zone or a good area for a week, because they're becoming all too common at the moment. So yeah, it made total sense for this to come back up. Sort of had this bearish retest of that horizontal on that trend line. Looking at Ichimoku, at least on the crypto settings at the moment on the 4 hour, there was some Kumo support here. So I'm not surprised to see a little bit of a buy up if you go to the 4 hour and the crypto settings. There's some Kumo support here, but one thing that I am mindful of is that bearish Kumo twist that we've got here at the moment, which is indicating this bearish sort of environment, at least that we're in temporarily currently, and we still haven't made any higher highs above that 12k for a little bit of time now. So this makes total sense. So that 27 extension is looking likely. A lot of people looking at that 11.2, that 11.150 zone. Be very mindful of that being front run again. That's why that 27 extension seems like a pretty likely place to me, where I might even, if we do get down to it, which I feel we may, I'll probably look to start layering in some entries, a little bit more aggressive entries for a leverage long position from there, but still have my spot buys down very aggressively low, like still down towards 8, 7, 9, just in case we get something like that. So yeah, Ads, that's really my thought at the moment. That 27 extension, that demand looks pretty plausible to me, but one thing that we say quite often is don't look to catch exact dollar amounts. That's why the benefit of supply and demand is so powerful, which will teach you in just a short amount of time. But using horizontals is great, but also understand the limitations. Horizontals are very subjective, whereas supply and demand is based on liquidity and strong pivot points. So it's a little bit more of a wiser option to potentially layer in buys, maybe a little bit higher than where you thought the price might wick to, and maybe a little bit below that as well. And then you've got that demand zone covered.
Absolutely.
All right, that's pretty simple on BTC. Still ranging, not very bullish at the moment. 11.325 down to even that 61 extension looking potentially likely. So Ads F USD. I saw this morning. I thought there looked like there was a little bit of a strength on the 4 hour. I was wrong on that one, publicly wrong, because I said that inside the Discord. So happy to eat that, take the L on that one. But again, same thing with F. You can see the range pretty clearly defined there from these Fibonacci ratios and that demand zone that Ads has there. I'm not excited. I'm not disappointed in F. It just is what it is at the moment. Again, same thing. I got a nice buy. One of the previous buys that I had at 400. I'm happy to stick with that for a little bit of time. I don't see F just yet visiting that high quality demand that we have down around that 330, 320 area. In my opinion, that 370 area that we spoke of for quite a bit of time seems more likely, at least for a solid bounce from that area. Even though we've wicked into that demand zone and sort of eaten through it a little bit, those wicks which we were talking about in Discord today. And we'll go through wicks, so I won't talk about that. But that's just where I'm expecting a bounce from this at this stage, ads.
Yeah, and I'm exactly in the same boat as you, man. That 330 mark, or so, excuse me, that 330 mark is our daily one, is our macro scale demand zone. So that's an overall price magnet for this. But being realistic in the immediate term, within the next few days to 1 week, I think the 370 level that Ty did point out alongside that Fibonacci retracement is going to be a much more likely scenario. The market will decide for us in terms of what direction we're going to take after this demand zone is tested again. If we do start making, some price structure underneath this, and starting to make lower lows in comparison to the price structure or the market structure we got to the left here, this might be a play that we look for in the event of that. However, 370 is the immediate term, and that's where we should be looking for now, I think.
Agreed. Very much in the same position as BTC.
Yeah.
Nothing really out of the ordinary. I guess one thing, despite what I said a moment ago, 9 times out of 10, this is a pretty easy sort of market to be trading on the 4 hour, the 1 hour, even some cases to be scalping. I'm not a scalper myself, so I shouldn't be making that comment. But at least on the 1 hour and the 4 hour, this has been a pretty predictable sort of market, despite my error this morning. It's been pretty easily tradable, and the benefit, obviously, of BTC going sideways like this within this extended range is the fact that alts are still having their moments. We saw really great pushes on the back of some fundamental news for OMG this week. We recently saw ICX do these really crazy pump moves. GNT had a moment this week. Theta is having a go at the moment. So a lot of alts are still popping off quite heavily, which is really, really great because they're semi-predictable. Although, as I've said, the how dramatic the pullbacks are in alts currently against BTC is a little unnerving for me as an alt trader. It shows me that it's a little bit of a panicked market at the moment, at least for alt traders. As soon as BTC makes a move, we're aggressively out of the alts. But that's still making some really good alt trades. And again, the TA on the alts right now for pickup locations is pretty predictable.
Yeah.
All right, ads. Should we have a look at the BTC dominance chart, one we've been paying a lot of attention to lately?
Yes, absolutely should. Now, overall on the daily time frame, that's where a lot of these zones were initially drawn. And they're very, very difficult to find because haven't got clear pivot points, within this range here. Besides the one down here at the 57%ish mark for BTC dominance, and it is very likely that we can come down to this pivot and retest that pivot. That's where the scene of the crime is, as we usually would say. However, we have identified one zone just throughout that range there. And we are still walking towards it, honestly, Ty. We are still, coming down. I know it's quite a sharp trend there that we've been making for the last couple of weeks, really, since July. And honestly, I do expect it to get down there to that 59.5 level there on the BTC dominance. I don't really see this making higher highs unless we really confidently break above this trend. And we really, really need to do that if BTC wants to continue to make up ground. And I'll put the horizontal range just to identify where, making a higher high would be significant. We would need to get back up to the 63.33 level to really make a higher high a lower high and then continue to the upside for the BTC dominance chart. Otherwise, if that doesn't happen and we still continue this trend down, I do see 59.5 being tested, and pending that, we could even go as far as the lower demand level, which is that 58 mark tie on the BTC dominance.
Yeah, again, I agree with that. There's not really much more to say on this. I think if you aren't paying attention to the dominance chart, you really need to incorporate that into your strategy so you can understand the dominance of BTC, particularly if you are trading alts. And inside Discord last week, I posted a really great resource from Hasaka on Hasaka on Twitter, one of the OG guys, and he posted a really great chart that showed the correlation of a number of different altcoins to BTC, indicating that when BTC moves, the likelihood on a scale of 0 to 1 of whether that alt pairing would move against it. So you can go into the Discord to look at that. I think I posted it inside the general resources channel. But yeah, that covers that pretty well. Adds, I think one thing that we need to just have a quick look at in terms of alts is FBTC and Litecoin. As some of the majors, we've said a number of times, where we've seen a lot of the smaller caps having a run, but it's sort of this cycle that it goes through. The high caps, I think we're at mid caps now. So the guys like EOS. When I say mid caps, I mean not the top three, or the mid as in from 1 to 10, because that's really where I spend a bit of my time in terms of alt. So the EOS, the LTCs, we've seen Link have a really great run. Lend, BTC. Look for ones like Neo. We've seen OMG, ONTs. Those are the ones that I'm looking at the moment. And against the USD pairs as well. EOS USD is looking quite good as well. That's one that I've really got my eyes on. So I'll post a little bit more on the alt pairings inside Discord. Unibot made an appearance earlier today as well. ZRX BTC is another one that I am looking at currently, and also BNB BTC. Funnily enough, I haven't traded that for quite a long time. But the main one that I would share with you, because I won't go through it tonight, is EOS USDT. In terms of the USD pairings along with LTC, that is where I'm paying a fair bit of attention at the moment. Adds FBTC.
FBTC, nothing really out of the ordinary here, bro. It's really doing the same thing in accordance to that ETH USD chart that we shared just a moment ago with that descending sort of structure here. We've bounced off this short-term demand zone. Admittedly, I didn't have that drawn in prior to showing you all this chart, but that's where we would draw it from. Obviously, the scene of the crime before that explosion out of that zone, which is the 33,500 sat mark. And we have returned to it now. We've had a second bounce off this, so not a bad level to be buying off in terms of this move. I don't know about now. However, we just fell short of the fib retracement, swing high to low of that 38 fib retracement here, and we are heading back down to that demand. Whether or not we get back there will be one to find out over the next probably a couple of hours, even tonight. To be honest, we might see some movements over there, but you can use your supply levels there, midway through that structure to determine whether or not we have made a higher high, and we are starting to reverse this trend on the way down. And going off this, the 3,500 sat mark there, we are still very much in this downtrend until proven otherwise, Ty. So even though we did have that green signal on our steamroller down the bottom there, if you could just see that on the bottom, not a lot to say, to be honest. If I had to say anything, where can we end up in the next couple of hours? I would think 33,500 is where we would end up, right back down at demand. I don't think this was more a dead cat than anything else.
Yep, pretty much in line with what I'm thinking as well. The range that we've been in and we've revisited a couple of times is really just between sort of like 34,810 and down to 33,822 sort of thing. You can see where we've been held up, and we've been in that sort of little zone a couple of times before, where we wicked down into that area previously on the 20th of August. Similarly, we sort of were dabbling in that area around early August as well. and then revisited a couple of times between the 3rd and the 5th. So if price is going to hold up anywhere for FBTC, it's going to be around here. And it was also the bottom of the Kumo on the 4-hour. It was the bottom of the Kumo on the 4-hour using our crypto settings. For myself, it was the 78 extension. We've got a little bit of a hammer here, but looking instantly above it. If we were to proceed upwards, 34,410 is where I'm looking for a likely level of rejection, but I'm not entirely sure we'll get there because there's a fair bit, at least on the 4-hour. Looking at the Binance chart, there's quite a bit of resistance at this particular area. We've got 100 MA resistance, our EMA resistance in terms of our 10 and 20, our 50, and we're sitting just on the 100 at the moment. But the next sort of likely area, like what Ad said, if we can't hold here anyway, would be probably, like he said, around that 3,300 level. Potentially, we might see like a little flash wick down to maybe that 32,766 mark, where we've got also the 200 MA support on the 4-hour. So that's kind of what I'm looking at the moment. Again, nothing too extraordinary. We haven't made a lower low yet from that previous low, although it was sort of little scammy wiki on the 8th of August. But even down on the 12th of August, we're still above that from that little double bottom tweezer bottom that we had on the 23rd.
Yep.
So we could revisit that again, which I think would be likely pending how this area holds here. And which would still kind of be healthy for FBTC. If it were to break below that, let's say like 32.7 or 32.5 sat mark, I'd start getting a little bit worried about F.
Absolutely, that would clear it below that liquidity just here on the left hand side. So that would be pretty detrimental to at least the 4-hour time frame, and that would confirm it heading back down to the 3,100 sat mark.
Yeah, would not be good for alts, but on the flip side of that, may be good for the USD pairs and BTC and FUSD.
Yeah.
All right, Ads, let's get into the DXY. What is the DXY doing tonight?
Obviously, DXY being a regulated market, this is not financial advice. Please seek an independent financial advisor for your own circumstances. So the DXY, the US dollar currency index, we've been following this supply for quite some time now. And finally, we did break below the one that was drawn here, very close to where this is now. But we did break below that 92.5, 92.3 level. And we did find ourselves making a bottom. I wouldn't call this a bottom. I would say, a bottom for this move, for this swing move. But it might not be the overall bottom that we're all thinking of. Right now, the next level of interest was, that 93.3 level, where we did form a very, very short term, and I do premise is very, very short term supply before our main one up here at 93.8, which I do think is on the cards for another test. So if we draw that trend in that we're finding forming on the DXY, it is quite steep, but it's probably not going to last too long, just up until we get to this 93.8 level for another retest of that supply, where we've been rejected once, twice, 3 times now. So could this be the next? Could this be the breakout that we'll see with this supply? It could, making an ascending triangle structure coming up to this supply would be something that I'd be looking for. If not, and we do break down after testing this again, then it would be really, really, it would negatively impact the DXY quite significantly. And I'm talking on a macro scale if we don't break above this 93.8 level. And more than likely we'll find some new lows in the within this year, lower than the 92.2. I think we'll see that 91.7. If we zoom out on the daily, we've got a number of zones that can be tested underneath that. I've put them all in. So there's a number of a number of areas of interest that we could slip down to with the DXY. So a little bit of a crucial point, in my opinion. This move just here, so from last week the 19th of August, we've already, extended or exhausted a lot of these indicators with not much left in the tank. So it could get interesting when we get down up to that 93.8.
So just on that real quick though, Ads, what would
Yes.
that mean for the majors or the other currency pairs if the DXY showed a bit of weakness here and headed back down towards that initial supply?
Well, if the DXY measures the strength of the US dollar in generalization to in general the entire, it's like BTC to crypto, whereas if BTC moves up, most of the alts tend to decline in value because that's the whole idea. If they're gonna sit at the same value, BTC rises, the alts need to fall to keep the same value in terms of dollar value. The same happens here with the DXY. As the DXY increases in value, the major pairs, the pairs that are paired against it, like Euro USD, Gold, Silver USD, AUD USD, for those watching in Australia like us, those will start to decrease. Just a flip. It needs to balance. The books need to balance. So that you'll find that as DXY increases, you'll find currencies like Euro, for example, that are paired against the US dollar will start to decrease to balance that out, and AUD will be in the same sort of boat where we are decreasing, Ty.
Perfect. All right, let's get into some of the metals: gold, silver.
All right, so gold have been following for quite some time on the daily time frame. We'll actually zoom it in for this example on the 4 hour. There is quite a number of zones where we could pick up here on this time frame. So I'll draw them in for you on the fly because it's nice and easy. There's one there. There's obviously the daily one up here. There's also one here just in the interim. So for gold, we are ranging really in between these two 4 hour targets, or these longer term time frame areas of interest. Excuse me. We are declining back to our Fibonacci retrace, which is the 7.8 on this extension. It's not looking too good right now for gold. As the US dollar does start to increase, we are going to see gold decrease. It's not immune from the dollar gaining in value, even though if it's just a small amount. But I don't see it heading back down to 1860 in a hurry. There needs to be some decent movements on the DXY over the next 4 or 5 days until the weekend before we do see gold move quite rapidly down. So it might be a slow bleed towards that level while the US dollar does increase. And silver is going to be pretty much the exact same scenario there, where we've got some level here. It is really, really weak, and it's not of good quality at all. But in the same sort of scenario where we will slowly bleed back down, to the 25.25 level on silver time. One thing that I want to go over as well while we're here is the SPX 500, or the US index for stock. Initially, I was looking at this, and we did have a very, very decent zone created here on the 19th, 20th of February, where we did decline quite rapidly out of that zone. Amongst the crisis that we find ourselves in, and we have reached it and exceeded it right now, which is interesting because obviously financial markets are meant to go the opposite way during a recession. So this stimulus and propping these markets up is very real at this time. So an all-time high for the SPX USD. One thing that I will bring to everyone's attention is Labor Day America, which is the 7th of September. That might be an interesting day or an interesting preceding couple of weeks after that. So keep that on your radar. Generally speaking, hearing some bits and pieces on the grapevine that might be a day to watch out for in terms of these larger indexes, AUD or the AUS, the ASX included for that one time.
All right, let's get into the supply and demand.
Yes, we will.
So also don't forget, for everybody that wants to get a hold of our indicators as well, we're doing our Premium and Pro indicator packs, which we use obviously really heavily alongside identifying levels of supply and demand through tools like Steamroller, which you can see down the bottom there. One which I've really been using a lot more lately on my charts is Trend Breaker. It's got this really cool volume weighted moving average, which I find acts really well as levels of support and resistance paired with the bands that Trend Breaker has. And Unimoku as well for obviously identifying liquidity zones that might line up with your 50, with your Kumo or your Tenkan or your Kijin. So you can see this here at unitytradinggroup.com/supply and demand. So it breaks down everything that we talk about in this guide, supply and demand, which adds is the man on. And then also down the bottom there was a recent session that we did inside the inner circle, our former premium trade group, where we went through and did this on a little bit more of a detailed scale. But nonetheless, we're still going to get quite into the weeds tonight on this one, Ads.
Absolutely. So in terms of taking questions and everything like that, I'm monitoring YouTube, the YouTube comments at the moment, and also we'll be monitoring Discord in the general. Also, if you guys had any questions to fire at us later in the session, we won't be monitoring Facebook or Twitch at this time. So just YouTube and the Discord if you wanted to ask any questions later on in the session. So, without further ado, what is supply and demand? Supply and demand is, I'm not going to read straight off the website. I'll really give you my rendition of what supply and demand is. It's really support and resistance 2.0. Now, what Ty didn't mention earlier is that support and resistance, there is a fundamental issue with support and resistance, is that it is very objective. So, Ty will draw it differently to me, or I'll have a different line in my chart than Ty. Jamie will have a different line in his chart. Michael will have a different line in his chart. It's a very difficult thing to pinpoint one price and expect price to respect that in every case. Obviously, there are instances where support and resistance does work, and it works very well. It's the oldest trick in the book, so we're not denying its existence and that it does or does not work. However, supply and demand is going to give you a more broader range to trade, and it's a little bit more workable. And that goes the same with trend lines. It is objective, and we have covered that multiple times so far. Anyway, supply is essentially a price zone that is on top of current price. It is sort of like a magnet, or it's trying to identify areas of liquidity that is above price, where price can get price can either move up to that zone or get rejected on that zone, as you can see via the example here. And demand is basically levels that are underneath current price. So demand being at the bottom, supply being at the top. They're both exactly the same thing. So measuring areas of liquidity below, and supply measuring areas of liquidity above. Essentially, the way it's drawn is not set in stone. It's not a concrete thing, and that's the fundamental issue with supply and demand. It is a little bit hard or a little bit tricky to get right, and it takes a lot of practice to really get this correct, because every single instance, every single chart, every single price structure is going to be different to the last one. So, charting up BTC USD, for example, you're going to have a lot of different zones or a lot of different candle structure than you are something like EOS BTC, or something like, or even Euro USD. The price, the candle structure is going to be completely different, and the issue is finding which zone will be respected. But you can use a whole number of tools to be able to identify whether or not price will be drawn to a level or not. And a lot of you know how to use like fibs and everything like that, so it's going to be a tool that you'll use in conjunction with other things. You probably shouldn't use supply and demand on its own. although it did come from Forex and it was initially used on its own. So no indicators, no volume, only supply and demand on the chart, nothing else, keeping it simple as possible. However, here at UTG, we know a lot of the people in the crypto space are very heavily heavily use RSI, CCI, Fibonacci, trend lines. They heavily use, stuff like Steamroller, for example, the in-house indicator that we developed. So we're really pairing it with those things to give you a little bit more confluence or more of an edge when you're identifying these levels. So finding a demand zone, it's something that we'll get into the charts quite soon. But before we do that, we'll have a look at the laws of supply and demand. So we'll read these for you. So we're looking for Swiss supply. You obviously look for zones that are above price, which we have said just previously. So we're looking for example, if price is down here, we're looking for zones that are above price, and retests a very good premise of how either large or where the zone should be. But the things that you should look for candles that occur before a large move down. So obviously a big leg down out of a price zone will determine where the zone will be, and it will really determine if the zone is of high or low quality. Essentially looking for a market pivot where you've got the price coming up and then slamming back down, creating a pivot point, and that's going to give you the best quality zones where the price will most likely return in the future. Supply is often used to pick short positions, reversals. So what I mean by this when I wrote this is that you need to have the zone of adequate size. So if you have something that's too large, that blows a stop loss out of proportion, it's not really good. You need to find new structure to be able to draw the zone in. So all you need to remember, it needs to be of adequate size. And we'll go through this in the examples. Using the entire candle at the top of a pivot. Usually this is a good way to determine the size of a zone. Just make sure it is obviously of an acceptable size, which we'll have a look at later on. But usually when you have big explosions out of this zone, we're looking for the candles prior to this, whether it be bearish or bullish candles, red or green, obviously. But we're really looking for the candles that are of good or adequate size. If using the entire candle makes the zone too large, then you can cut it down to using the top of the candle, the bottom of the body, the top of the body, the wick, whatever that scenario presents itself to you. And this is the issue that we've found is a lot of scenarios are different to each other. So you have to really tailor it. It's really like a little bit of an art form that we've mentioned in the Discord multiple times. Also looking for potential retests to confirm that the zone exists. This can also help with sizing. So if you've got a larger structure here to the left, and for example, you've got quite a large number of candles there, and they're of quite large size, you can look right to a retest, and that can determine how large or how small that zone can be. And you can also size it off the candle structure to the left, looking right to your retest to determine that size. And demand is very, very similar, but however, it's at the bottom. So we're looking for consolidation price structure below current price. Demand is used to open long positions or buy an instrument or asset. And then you can use the size of the zone to determine where your stop loss should be. However, all the other rules are the same as supply. So broken zones. Broken zones are very important, and this is a very, very important tool to determine whether the asset that you're trading or the asset that you're looking at is going to continue, is going to give you a continuation and continue to the next zone above. So what we're looking for is obviously we've got a pivot point here just to the left. We've used the candle before the leg down, which is of adequate size to draw the zone in. And then we've got price that has respected that level, so come all the way to the top and been rejected. However, it has eaten most of the liquidity that is in this price zone. So you can see that it's eaten most of the zone there. And then preceding that, we had a breakthrough. So price has made a higher high in structure compared to the zone, or compared to the price structure to the left. So it's made a higher high, and then preceding that, we have moved through it. Exactly the same scenario, just with demand, where we've eaten up most of the liquidity. Preceding that, we have moved through it to the right, and then immediately, or preceding that, we have come through and continued. So I know it's a lot to take in. unitytradingcrypt.com/supply and demand if you want to read this and take notes for yourself. This is a tool that is not going anywhere, or this is literature that is not going anywhere alongside our video just at the bottom. So moving on, we will have a look at a few examples, and we'll have Steamroller on the bottom here, our indicator that we've built in-house to really give you a grasp of how we can use some indicators to determine whether or not price will continue or reject at a level. So we're looking at Bitcoin, US dollar, Bitstamp chart on the daily, and we'll have a look at our zone. So what we look for, obviously, in a supply level is we look for, like I said, we look for areas of which are pivot points. So there is a number of pivot points that I can see on the chart immediately, and I will draw them in for you, where we've got this pivot, that one, this one here, and then we've got a move down, and then another pivot point here, and then we continue, and obviously you get the idea. We've got these market pivots. So looking at price now on the daily time frame, we want to look at the pivot points that will create zones that are above the current price. And then obviously, if you have any questions, put them in the chat, Discord or YouTube, and we'll get to them after we've gone through some examples. Okay, so we're looking at this pivot here. So we've got a pivot up here, and we've obviously got one there and one there that's above current price at the moment. So we take the parallel channel tool, all right, just to the left here in the second menu. What you do is you click on the chart of where you think the zone should be, and then automatically you're going to find that TradingView is going to do all sorts of these ones. So what you do, hold shift to lock it in place to the right, click, let go of shift, and then you can move up and down to determine the height of the zone. So for this example, we're going to use the candle body. Why did we use just the candle body? So like I did premise before, we've got a market pivot point and a significant leg down out of that price zone. Okay, so that's our market pivot. If we drew the zone like that, it breaks one of the rules that we've outlined before. The zone will be too large. It's not sizable. So if we took a short position, or if we took a sell position here, for example, and this is not financial advice, this is all theoretical, and we brought it up here, or even brought it up to, you know, making a higher high on the wick, that zone's going to be much too large, you know, for a short position on BitMEX, for example. If you're using 25x, 50x, 10x, for example, you're looking at an 85% stop loss. All right, so it's not sizable. So what we've done in this instance, we've used the green candle before the price move or the leg down, and we've used just the body to determine the size of the zone. All right, we're not using the wick. We're not using the whole candle because the zone would be too large. We're just using the body. All right. So when we do, if we do take a position off this level, you're looking at a 3.37% stop loss for that zone in particular. Also noting, why haven't we just used the wick? So, one sec. Why haven't we just used the wick? Another rule, going back to that literature before, is that if you notice just to the right of this pivot, we have a retest. A retest at 12 250. So this immediately tells you that your zone should be off the body, that size, and it should be here, not up here, because we have already structured to the right telling us that that zone is where it should be. And if we move price over to the right hand side, all right, not knowing that any of this has occurred yet, all right, we don't need any of this information. We've determined the size of the zone. We've got a retest at 12,250. And then when we've come up just recently on the right hand side here, we've had our rejection on the 18th and the 19th of August, which was only last week. Pairing this with the steamroller indicator that we've built will give you an idea of where the zone, or you know where the zone is, but whether or not we're going to continue or not, you can use the indicator to tell you that. So pairing these two together. So we've got that pivot, we've got the rejection, steamroller is also telling you that we've got the rejection there. And we'll go through where you can get steamroller if you're interested also. So that's fantastic. All right, we've got our level of supply that's above current price. So what about demand? What about something below? Now, if we look at the rules of supply and demand, we're looking for significant pivot points. And that's the first thing we'll go over, and we'll go over the other types later on, but we're looking for significant pivot points here. There's two ways you can find this. There's two ways you can find the level of demand in this scenario. You can use your pivot points, or you can use significant levels of a consolidation, of price moving right, because liquidity is building at that spot. Liquidity is building there. And the zone that really points itself out to me is here. We've got a significant area of liquidity, between the 10,000 mark and, the 8,300 mark for this example. So here and here. Obviously, we can't put a zone in that's that big because it's not going to work. So we have to find a few there. So if we open the chart up to give us a little bit more information on where the zone should be, there's two levels that really stand out. You've got this level here. We've got some movement to the right. You'd be using this candle really, or these structure of candles to give you a zone. Or you've got this zone here. However, we've got significant moves out of that zone. So you probably wouldn't use that zone. You'd probably stick with this one here at the 9.2 mark. There's obviously zones in between, but we'll get to that. So looking for a significant leg or significant price out of a zone or out of an area, and then using the scene of the crime, basically the bottom consolidation or accumulation before that leg, to determine our size. So what we've gone over so far, we've gone over market pivot points, finding price zones on market pivots, using the retest to the right hand side to determine that size. And we've looked at drawing a demand on a consolidation or an accumulation period, or a period to the right where liquidity has been building before a price movement out of that zone. There are significant pivot points below this area of demand if you would like to draw them in. There's a few to choose from. Obviously, we've got a pivot point here. Oops. Choose the right tool. We've got a pivot point here, obviously, at the bottom. We've seen the market pivot, create an adequate size zone with the candle bodies. That's one we can look at 5,250. Not saying it's going to get there, just for this example. And then we've got a number of pivot points, although they might be on a smaller time frame. They might be more visible on a smaller time frame. We've got a zone here. We've got a pivot point and an adequate candle body at 67.50. And then there's another one here, but I won't draw that in for this example. A couple of zones too tightly or too close together. So you've probably seen on a number of my charts in the past that I've drawn zones in where we've had price being held up here. And I'll replay this chart to give you an example of that. And I'll get rid of all the drawings. So when we did bottom, or when we did find a bottom around 4.8 where we closed in March of this year, a couple of months ago, we did have a number of pauses in the market on the way down, before we got to 4.8. And you can indeed draw zones on these pauses. However, it circles back to what I was saying before at the start of the lesson, where I was saying that there's two types of zones that you have to really keep in mind when you're using this strategy. There is high quality zones, and they're the zones that you really find on those market pivots. All right, they're going to be your highest quality zones. That's where the professional institutional type trader will shoot for. That's the areas that they'll shoot for if they're buying the major swings. And there's pauses in the market like the zone that I've drawn in here, but they're the lowest quality zones. So what happens is when we come up to a low quality zone, it's not a likely scenario that will get held up or rejected here, A, for very long, or B, at all. If I play this chart and we have a look at some of the structure that we're going to form here, when we get there, we've got the first and second candle respected on the daily. So yes, the answer is yes. Does this zone exist? Yes, it does. This zone does exist on a daily time frame, although it is low quality. Low quality meaning that A, will get held up here for a very short amount of time, or B, not at all. So yes, we were held up for a number of days, probably 4 or 5 days there, before moving through that zone and shooting for the next pivot, the next price zone. So this level is going to be a better zone. However, it's not going to be the best zone. So still of low quality. The highest quality is obviously going to be the one that you find at the top. If we weren't looking further left, obviously, if we weren't looking further left, just for this example, this is going to be your highest quality zone. And I had this zone drawn in my charts, if you remember, in the Discord for quite some time. So if I get rid of the replay, you'll find that we did respect it a number of times before pushing through it. So another one of our rules, pushing through it here on the 1st of June before testing it again and moving straight past it. All right, so if you just circle back to the literature and remember that you need to look for market pivot points, you need to look at if price will move through it, even if it's just fractionally. If we move through it, then there is a higher chance that we will push through and look for the zone of even higher quality again, where we did find it on the 9th of June last year, and that was the major target there for BTC. So the takeaway from this: draw the zones on the daily if you're going to trade this time frame. Draw the zones on the 4 hour if you're going to trade that time frame. There is a number of zones in either chart or in either time frame that will be respected on that time frame. So if you're looking at this low quality zone, for example, compared against some of these ones here, although they are quite large, you're looking at rejections there. If you were to be drawing in support or resistance, for example, you might have put the resistance up here. moving that across. We've got significant levels of resistance here. However, we didn't get there. So if you're looking at a long, for example, on a lower time frame, and you're looking at a 4-hour resistance, you might have not gotten your target or your take profit. You might have got stopped out in profit instead. Whereas if you would use that level of supply, for example, knowing that you can draw it and use the entirety of a candle in a smaller time frame or smaller time frame pivot, your take profit would have hit. Or your short position would have filled and your stop loss would have been in the correct spot. So if you're not using this strategy, then it would be in your best interest, if you're using support and resistance actively now, then it might be an idea to put this as part of your trading plan and take advantage of this more advanced strategy. And obviously pairing it against or using it in conjunction with some indicators like steamroller to really give you an edge or really give you an idea if these zones are going to be respected, or not. Because if we have a zone in the middle of price and some of your indicators are still ranging to the upside or still have a fair amount to move, you might want to have a look and see if there is any higher quality zones above the one that you drew in the chart. But yeah, that's a very brief, well, not brief, but it's a little bit detailed overview of supply and demand and how to find these zones. Hopefully I was as clear as day. We'll have a look at some of these questions before showing you guys where you can find steamroller.
So there were a couple of questions. The first one was just again, what's the tool that you're using to draw that? And can you just run through that process again with the parallel tool?
On the left-hand side of the chart, you will find, on the second row down, you will find parallel channel. All right, you can click that. You can click where firstly, click on the chart once. You'll find that TradingView likes to flop the line around a little bit. Hold down Shift to lock the price. Click again, let go of Shift to determine your height. One more thing that I will add is once you've drawn the level in, double click to bring up the settings, style, extend right line, and it will extend that indefinitely to the right to give you a much nicer, much more precise chart or much more precise supply or demand to use in the future.
So another question was from Grant, which was answered. Thank you, Jamie. But he said around the swing high and the swing low, would that be the best way to find supply and demand?
Grant, the short answer is yes. You can find swing high. Typically, you can find supply and demand at the swing high and the swing low. If you look for the overall swings on the higher time frames where you've got your swing high to swing low, that swing creates your pivot. So that's where we're really looking for the highest quality zones. So yes, short answer yes, and that was the long-winded answer where you're looking for those pivots. Thank you, Grant.
And what other tools might work with supply and demand ads?
We have used a number of tools in the past. Obviously, steamroller being one of those tools or indicators we've used. However, something that we've used quite a bit is Ichimoku. Ichimoku works really, really well with supply and demand to really find those levels and give you that premise. So you could probably find some cloud support on these levels here, and more times than not, they will correspond with levels of supply and demand, where we've got the cloud support in the past, and then you've got a pivot point and a supply running across. So that's one indicator or one tool you can use. Otherwise, it's our guy Leo, and Fibonacci works really, really well with this strategy, and that's why we teach the strategy that way while with using Fibonacci. So if we bring up Fib retrace, draw it from our swing high to swing low, just for this example, you can see the 61.8 retrace lines up pretty much perfectly with your level of supply.
You can also use the volume profile, the VPVR, which is I think it's only on Pro or Premium and above on TradingView. So sorry for those guys that are using the free; it's well worth the investment. Where you'll often find that the VPVR will line up with levels of liquidity. Obviously, it is in a volume profile, but if you change that the number of bars to 100, you'll often find that depending on the level that the volume profile is taking in, you'll see it lines up pretty well with levels of demand, which you can see there, a top supply there, that little micro supply lining up quite well with that level of volume, as does that 50 fib there as well. So that's a really good little tool. And then obviously you see the sort of liquidity voids where you would expect prices sort of, like what I'd said, magnet from a supply to a demand, or a demand to a supply. So that's a really handy little tool as well. Like what I'd said, using our Ichimoku indicator as well, you can change on the fly between the standard or the crypto settings, where you might find that your 50 or your Kumo or even your Tenkan or Kijun aligns quite well with levels of supply and demand, depending on the time frame that you're looking at as well as.
Yeah, absolutely. Any more questions we've got? Anything?
So there is. So Jamie answered the around swing high and swing low thing, and he said, well, in well-defined swings, it's a little bit easier, but in consolidation areas, it can be a little trickier. So would you use supply and demand in consolidation areas? I guess you would to find smaller ranges for trades. Yeah,
absolutely. It does work on pretty much all time frames. So you can use those consolidation zones like we have here at that 9.2 level to find that level, that breakout, or the scene of the crime where that breakout took place, the accumulation beforehand. So yes, absolutely, you would. I can see another question here also on YouTube. So use support and resistance to find supply and demand to do the same thing. Support and resistance is the same thing in terms of price will reject or be respected on either direction, or either above or below price. Yes, that's correct. However, this is not objective. There is no guessing on where the price, or where the resistance, or where the support should be. Is it there? Is it there? Is it at the wicks? Is it higher? There's no two levels. Ty might draw it one way, I might draw it another. It takes the objectiveness out of the TA. And that's the fundamental difference. That's why in Forex, where this was born, that's why they use this as opposed to support and resistance, because there is no objective portion of it. There's no two ways to draw it. There is one way to draw it. There is only one zone in that level. You can't draw it here. You can't draw it there. It can only be drawn here, and it will be respected every time there. And that's the fundamental difference. Yeah.
Perfect. Well, I hope you enjoyed that. A little bit of a different format for UTG in terms of the live sessions like this, which we'll do a little bit more. We'll do one or two of these a month, or maybe one a month, where the following week we can take questions. If anybody has anything, you can post it inside the Discord, unitytradinggroup.com. And don't forget, if you want to get your hands on our trade journals, Steamroller, Unimoku, anything like that, you can go to unitytradinggroup.com, go to the indicators. We've got our pro and premium trade packs, our Forex Masterclass, Steamroller, if you'd like that by itself, and obviously that trade journal as well, which is really, really, really handy little tool. If you can trade and journal your trades and identify visually as well as by keeping yourself accountable, by entering all that information and reminding yourself constantly of where you went wrong for trades, that trade journal is really, really great. It's a really handy little tool. But the pro trade pack, you get Steamroller, Unimoku, and also Unicon, which is our OG indicator, and then inside the premium pack you get everything as well as the trade journal. So that's Trend Breaker, Steamroller, Unicon, Unimoku, and the trade journal as well for $35 a month. Really handy little tool, especially if you pair it with supply and demand. Mwah, delicious.
Absolutely. Incredible.
Yeah, so thank you so much, guys. Hope you enjoyed that. Please leave your comments or feedback over on YouTube or in the Discord. We'd love to understand what it is that you're wanting and what it is that you're looking for from these Tuesday night sessions. Do we keep mixing it up like this, or do we just keep sharing the TA and keeping it pretty standard? We won't continue this on unless we have your feedback and your support to want to keep doing this. So thank you very much for joining us, and we will see you on Thursday night.
Thank you all. See you then.
Bye.